Hey everyone, here today to talk about the infamous Fed meeting that we've all been waiting for. Today, the Fed announced a 25 basis point rate increase, the 9th consecutive rate increase, increasing the final benchmark rate to 5%, which is the highest federal funds rate since 2007. There was a lot of uncertainty going on in the market. We didn't know if the Fed was actually going to increase interest rates with the whole Silicon Valley Signature Bank collapse or the whole banking crisis that we've been seeing over the course of the past few weeks. But the Fed stayed course and they did increase federal funds rate up to 5% by 25 bips. However, we finally were able to get the dovish comments that we needed to signal that interest rate increases are here to slow down. Previously, in previous meetings, the Fed would always say ongoing rate increases. They finally eliminated that, and they now will state that future policy will be reviewed here in the upcoming months. So it's a major change from, again, increasing to will be reviewed in the future. So we finally got those dovish comments, which signals to me that lower interest rates or lower federal funds rate or a flattened federal funds rate is on the horizon over the course of the next few months. So prior to today, or prior to the Silicon Valley Bank collapse, the Fed's sole goal with raising interest rates is always to bring down inflation. Well, I'm here today to talk about how we know inflation is coming down, and we know how inflation will come down significantly quicker here over the course of the next few months. So inflation peaked around 9.1%. Now we're down to sub 6%, but in reality, we want it to be around 2%. So how do we know, or how are we going to get there? Well, the big problem with inflation that we've seen over the course of the past 6 months is that shelter, which is 1/3 of the index, is continuing to go up each and every single month. Just this past month, shelter hit an all-time high. Well, we know that shelter is coming down. Both home prices have come down over the course of the past year, and we know that apartments have come down. The problem is that shelter is a 12-month lagging indicator. So now we've been waiting for the year-over-year decrease. Well, it's here. We finally had our first year-over-year decrease in home prices, which should signal that shelter should start coming down here in the next 30, 60, 90 days on the CPI report. When that happens, shelter, again, the CPI will start to come down much quicker. We're still a ways away from our 2% target, but we're at 6 now. We'll start to come down below 4, maybe even start approaching the 3 to 3.5 range, which should signal to the Fed that we have lower CPI, which should again trigger to them that they can start rate cuts here in the near future. In addition, I want to go over some other data which will highlight and point to lower home prices or lower shelter CPI here in the near future. If we look at the average US list price, according to Altos Research, it's around $400,000 this week. If you look at the average US list price 1 year ago today, so that year-over-year adjustment, the average list price was right around the same, $400,000. Well, we know last year we saw a massive frenzy of bidding wars, which basically triggered US list prices to continue to go up significantly the next 2 to 3 months. Even though some properties are seeing bidding wars, we know the frenzy in 2022 is not what we're seeing now. And how do we know that? We know that because price reductions are nearly double at this point what they were last year. So if price reductions are double, that means obviously again we're not seeing that same bidding war. Thus, what does this lead to? This leads to that US list prices will not increase at the same pace as it was doing last year. Thus, again, when list prices, that's eventually going to lead to conversions, which are going to lead to lower home values, which are going to lead to year-over-year decreases in value. By doing so, this is going to bring down the shelter CPI even more than what it is reporting currently. So this is good news and should continue to add ammunition to the Fed that we have peaked in CPI, we will continue to come down, thus giving them confidence to lower that federal funds rate that we are expecting to see over the course of the next 6 months.